Hi, everyone. Thank you for joining us for HerCapital's event in partnership with SIMON, which is an award-winning fintech company. I'm super excited to welcome Bindya and Jillian from SIMON Markets. Thank you both for being here. My name is Rabia Athar. I'm one of the co-founders of HerCapital, and I'm joined by my colleague Lisa Lam, who is our lead for programming. Before we get started, I'll quickly pass over to Bindya and Jillian to introduce themselves and tell us a little bit more about SIMON.
I'll kick us off here. Good evening, everybody. First of all, Rabia, Lisa, thank you guys so much for inviting us, for including us. We are so happy and humbled to be here. This is a first for me, so I'm really looking forward to the next hour. For folks who are joining us, my name is Jillian Altamira. I'm currently the head of growth at SIMON Markets. We'll tell you a little bit more about SIMON in just a few minutes. A little bit about me. First of all, coming to you from Brooklyn, New York this evening. So born and bred in the New York area, spent my entire career in New York. I started at Goldman Sachs out of the analyst program. Actually, I was a summer analyst back in 2010. Met the team there that I actually ended up starting on in 2011, and I have been with those same people ever since. So I was at Goldman for about 8 years. SIMON Markets is actually a spin-off from Goldman, so had the pleasure of actually leaving Goldman with my, what I will call colleagues and friends in tow. Mm-hmm. And we started SIMON back in December of 2018 is when we spun off from Goldman. So been with SIMON ever since, and look forward to sharing more about the company. Bindya, I'll pass it to you.
Awesome. Thanks so much, Jillian. Hey, everyone. So excited to be here. My name's Bindya Jadvani. I head up annuity strategic relationships at SIMON, where I work with our insurance companies and clients for the annuities business. Similar to Jillian, I started out as a summer analyst at Goldman Sachs. I spent 10 years at Goldman leading large-scale initiatives, done many different roles, and I was fortunate enough to be part of SIMON when SIMON spun off as an independent company into a fintech startup. It's been a super exciting journey that I'm looking forward to sharing with you all. But like Jillian mentioned, thank you so much to HerCapital, Rabia, Lisa, for creating this safe space for us to talk about topics that are so close to Jillian and my hearts. Careers for women, investing for women. I'm a working mom. I joined SIMON when my son was a year old. I also come from a culture where women are not expected to be financially independent. But it's so incredibly important, and I'm really looking forward to this discussion today.
Awesome. Well, thank you both for being here. We're super excited to have you both here. As the title of the event suggests, our discussion today is focused on careers, and it's focused on investing. And the reason why we're super excited to have both Bindya and Jillian here is because their career trajectory is actually quite fascinating and interesting, having worked both on Wall Street and then now at a super cutting edge fintech company. And so to start off the discussion, we'll talk about their careers and talk about how they've done so well in their careers and any advice they have for our audience. And then the second part of the discussion will focus on investing and specifically on SIMON and some of the resources that they have that can hopefully be helpful to our community. So to get started, I'll pass over to Lisa to focus on the career discussion, and then we'll start talking about the investing aspect of the discussion. For our audience, if you have questions, please put them in the comments per usual, and Bindya and Jillian will try to take questions as we go along. Also, for the audience, at the end of the event, we will have some time for Q&A, so we'll try to take any additional questions at the end of the event also. And so with that, I'll pass over to Lisa to start talking about Jillian and Bindya's career.
Thank you. All right. So as you know, many of our followers on social media are young professionals looking to enter the finance industry, and they want to know and learn from how other women have jump-started their career. So we can start with Bindya and then Jillian. You can tell us about how you found yourself working in the finance industry and how your career has developed over the years.
Absolutely. So mine has not been a traditional journey into finance. I started out in the technology space. I did my undergrad in computer science back in India, and I came to UC Berkeley to pursue my master's. And that's where I took a few classes at the Haas School of Business, finance classes, management of technology classes. And that's where I realized my passion actually lies somewhere between technology, business, and finance. And so when Goldman came to campus and offered me a position that helped me, get the best of both worlds, it was perfect. And I spent 10 years at Goldman, like I mentioned, did a variety of roles. I've moved a lot within Goldman. So roles been in tech, within product, and now in sales. So it's been super exciting. And so, and now I'm at a fintech. So it's been great. Jillian, do you want to go next?
Yeah, it's funny for me, it was a bit of a process of elimination growing up. I grew up with two parents as lawyers, so that was an immediate no for me. I don't consider myself like particularly like dexterous or whatever that word is. So being a doctor was also out. So, but I always loved numbers and I loved math. I was a math major in college. And when I think about it, I think, it was the practical application of applying that degree. And that's ultimately what led me to look at finance. I think what ultimately landed me comfortably in the finance world was actually the people I met along the way. And that'll very much be a recurring theme for me tonight, is talking about how amazing it is to find colleagues and mentors and mentees that you really connect with and hitch your wagon to. But for me, I knew from the moment that I stepped foot at Goldman back in 2010, even as an intern, that I wanted to be specifically in finance because I wanted to work with those people. And here we are 11 years later, and I'm working with the same people. So that was my non-traditional journey to finance.
Just going off of what you said, Jillian, I guess in the most concise way, how would you describe those people that you found in the finance industry?
Some of the most creative and autonomous and hilarious people I've ever worked with. I think, especially in I don't even know if it was specific to Goldman or to the team or what have you, but everybody that I came into contact with at Goldman, and of course here now at Simon, everybody just is aligned on the same vision. People want to work incredibly hard. They want to service their clients in the right way, but nobody takes themselves too seriously. And it allows us actually to scale very efficiently because we have a group of people who are really all aligned on the same mission and can work as fast as we possibly can to try to get as much done as possible. And for me, just combining I would say the very creative energy with this type A drive to do good and do good by your clients is what I think really, really resonated with the people that I met.
And continuing off of your career journey, we wanted to know, what was the transition like from Wall Street to FinTech? Because I can imagine those atmospheres are quite different.
It was, in a word, an adjustment, but a welcome one. And by the way, I had the most phenomenal career at Goldman. Just getting the exposure that I had, the work that we were able to do. I have nothing but positive things to say about my time at Goldman. But I think when I was thinking about this earlier actually, and I feel like in some ways we traded, structure and routine for the unknown, really, for uncertainty. And it might be a little bit more specific to Simon, where as a fintech company, we're a lot smaller, of course, than we were when we were at Goldman. Goldman has 30,000+ people. Simon, we have about 115 or so people at the company. But what that allowed us to do is you move, I think, from deep to wide is kind of how I think about it. When I was at Goldman, you become a subject matter expert. Everybody works in a particular product, or they work for a particular division or for a particular client type, and you just dive straight in. You're a subject matter expert. At Simon, you need to be so nimble. You need to be knowledgeable on a million different things, right? And I think it's that fintech culture that encourages that, right? The expectation is that you know a little bit about everything. So that for me was kind of the biggest adjustment. But Bindi, I'm curious to hear what you think about that as well.
Yeah, no, absolutely. I agree with everything Jillian said. As people are thinking about new jobs, moving to new roles and new companies, I think there are certain things that you should watch out for. Like, culture of the company is so important and key. Your leadership, is your leadership invested in you? Are they helping you grow? Are you having fun? Like Jillian mentioned, we have a lot of fun at Simon. I get up every day. I'm excited about everything that we can do as a team. It's, you're working with the smartest people, but you're also collaborating. So it's not just, everything that but to get things done, you need to work as a team. You need to have, good relationships with everyone, be it in your team, outside your team. So I've absolutely loved the transition. I think we take the best of both worlds. We have the Goldman culture embedded in Simon, but we have so much fun layering that startup culture on top. So it's been amazing. And I think both worlds, pros and cons. Like obviously, like Jillian said, working for a Goldman or any Wall Street bank is a safer option. It's great to have Goldman on your resume. And I don't regret that at all. But you do get a little siloed in the role that you are in, unless you're actively managing your career and moving along. But within Simon, we were 28 people and we formed a company. We were all wearing multiple hats. We were given opportunities to go do whatever we wanted to do because there was so much to do and we were so lean. And so with that comes career opportunity. With that comes a lot of responsibility. And if that excites you, I think startups are a great place to be.
Yeah, I think one thing that I'm curious about what you both think is, you kind of, I feel like Simon was incubated within Goldman almost, and that sounds pretty unusual. Like, how often are there opportunities for women or folks on this call that are interested in going into the financial services industry? How often do you think they would have this responsibility or this opportunity to be in kind of startup-y roles while still at a big bank?
I think you're seeing a lot more of that these days. Even Goldman, there's an existing program that extended beyond, just spinning Simon out of the firm that cultivates creativity and innovation. So they will fund internal projects at Goldman. All you need to do is raise your hand with an idea. And I've seen that kind of play out at other banks as well. There was an incubation lab I remember that Barclays was doing a few years ago, where they brought people into a WeWork style office space and had them, pitch ideas. So, it's trending in the right direction, right? I feel like people are borrowing from some of the recent success stories that you're seeing of these companies spinning off. Hopefully Simon being one of them, I'll knock on wood as I say that. And I feel like you're seeing more banks kind of buy into that and pile on with their innovation programs.
Absolutely. And so, it's great to be part of a company within a company, but if folks are looking at fintechs that are not backed by big companies, you should be looking out for certain things. It's a risk you're taking with your career. So you should look at the problem they're trying to solve. Is it a really challenging problem? Is it going to scale? And then back to the leadership. Is the leadership, going to invest in you, going to invest in the company, make it $1 billion company? So those are the things you should watch out for as you're looking at both kind of careers.
All right, well, I guess you guys beat me to my next question when considering between Wall Street versus fintech. So we'll go ahead and skip to the next one. Both of you guys can answer. Do you guys have any advice on how to build credibility and confidence in this industry? I wasn't a student long ago studying finance and just thinking about how finance is, even my classrooms were heavily male. How can you stand out or without feeling like you need to prove yourself when you guys are performing at the same rate, interviewing with the same companies? How did you guys develop your confidence throughout your career?
I think for me, it was about staying very close to my network. And when I think about my network, it was leaning on very successful women, but who were senior to me. So really cultivating mentorship type relationships. But at the same time, and I feel like people don't emphasize this enough, it was also cultivating junior relationships and acquiring mentees. And so the advice that someone once gave me was the best thing you can do in your own career is to educate your replacement. So go find your replacement, teach them everything you know, and that allows you to kind of move on to something new. And I've been very fortunate that I've gotten to work with so many people where we had that symbiotic relationship of, mentor, mentee, and the opposite direction as well. So building credibility, building a reputation in finance is, to me, it's all about your network and the people you choose to stay close to and hitch your wagon to. I have, I would say over the course of my career, I've tended to I would say, lean toward finding like women in particular in the space, because they offer the perspective that I was seeking around, being an underrepresented minority in finance. So that was definitely a big active push that I made. But yeah, I would say, keep a very, very close network. The last piece that I'd say too is, and how do I like articulate this? Don't forget to add like the personal touch as well. I mean, there's a world outside of the office, and if you can start forging relationships with folks both in and outside of the office, I found that to be a massive credibility and reputation driver, because you just build up that trust with them.
I have not much to add on what Jillian's perfect answer, because I could not agree more. Your network, the mentors you have, the sponsors you have are incredibly important as you grow in your career. You obviously, have to get the basics right, work hard, get things done. And that's how you build trust. You start with that, kind of prove your worth. And with that, you make people's lives easier. And then people start trusting you more, give you more opportunity. But I couldn't agree more on the power of your network, power of mentorship. So
yeah, Vindhya, I love what you said at the end, because I was going to add that. I think as a young person in this career particularly, but really in any career, if you can make the lives of people around you easier, that's a really easy and often low-hanging fruit solution to adding value and building credibility. So thinking around like, how can you automate things that maybe have been done a certain way for a long time? How can you improve processes that people take for granted, or maybe people that have been doing the job for 20, 25 years aren't thinking about? So when there's young, kind of fresh people that join a role, you can kind of bring that fresh new energy and hopefully change things and make them easier for everyone around you. So I really would agree with that. I think that's very important.
Yep, exactly. You don't need to be the expert starting out. So young folks should not think that they know how to be, an expert in structured investments or annuities or anything like that. You just have to have the right attitude.
Yeah,
that's key, right? You should have the ability to learn, be a go-getter, and slowly become the go-to person for something, and make people's lives easier. So yeah, that's it.
Definitely, as a young professional myself, I'm taking these comments and putting them into my pocket. So thank you for that. But the last question regarding career development, this is for you, Jillian, but what was something you learned working in the finance industry that you didn't realize before entering it?
Aside from how expensive dry cleaning is, and how someone needs to disrupt that industry, I'll point it back to the question before that. I think reputation is critical. I think I walked in the door on my first day on the job in sales and trading and thought that, if I worked hard enough, or if I worked long enough, success would follow. And, of course, to some extent, that's very true, right? You want to be great at your job, and you want to put in the effort, but building a reputation, I mean, I've seen it time and time again in my career. And I will continue to give this advice to any woman who asks, or any person who asks. It's incredible to see the success that comes from creating that reputation for yourself and forging relationships with people. It is a relationship business, and that may not even be specific to finance, right? So many businesses are relationship businesses, and I learned from an old mentor of mine very long ago to invest heavily in that and build personal connections, and that's how you reputation build along the way. So that was kind of the number one thing that I learned on the job, if you will, that I think I underemphasized walking in the door 11 years ago.
Absolutely. I couldn't agree more. I feel like I would have given the same answer. I think it's something that as a student, particularly when you're in college and there's so much emphasis on kind of the, doing the work and that's about it. That really changes when you're in the professional world. And so I think that's very good advice. Thank you both for that. And so now we're wrapping up on the career discussion, and we'll deep dive, I was about to say dump into, we'll deep dive into the risk managed solutions discussion. So the first question that we want to ask you guys is, why did you build SIMON, and what is SIMON for our audience to understand better what you guys do? So maybe Jillian, I'll ask you to start.
Definitely. And hey, Bindhya, I'm going to lean on you heavily here too. So please jump in. Why did we build SIMON? So we incubated SIMON back in 2012, actually. So we're almost 9 years in, and we spun off Simon in 2018. The original business plan for Simon, by the way, if anybody is a Bruce Springsteen fan on the phone, and I might be talking to the wrong audience there, the actual business plan for Simon was created at a Bruce Springsteen concert back in the fall of 2012. So I'll never forget that. But when we talk about risk managed solutions and these types of investment products, these investment vehicles that investors like you and me can actually buy, it was a product class that if you run the clock back to 2012, it was ripe for disruption. And I almost hate saying ripe for disruption because it feels like, a little gimmicky. But if you look out across like the sales and trading floor, buying stocks, buying options, buying derivatives, buying bonds, even all of those things were completely automated. It was so easy for people to access those types of financial instruments. And the risk managed solution space had no such parallel. There was no easy access to education to understand what those products were, or even to buy them. And the crazy story that I like to tell is when financial advisors used to seek access to these types of products for their clients, we used to have financial advisors call like the 1-800 number at Goldman and get the investor relations guy on the line, right? And that was how they found our team. We covered financial advisor for risk managed solutions. So there was this like crazy game of telephone going on where nothing was automated. Everybody was picking up the phone and calling each other, and I'm all for hand-to-hand combat, but that was not the way this business was going to scale. So we said we've got to do something about it, right? We needed to build the technology that not just delivered access to the product, but delivered awareness and education around the product class as well. We need people to be educated on the types of products that offer, risk mitigating elements to them, like structured investments. So the impetus to build Simon was to really deliver a technology platform that sat on the desktops of financial advisors, made these types of products so accessible to financial advisors and help them learn more about it. I don't know, Betty, if you have anything to add to that. Yeah.
Well, you've nailed it, but I completely agree with you. Like technology is disrupting the financial industries overall, disrupting the insurance space, disrupting risk management solutions, and be at the forefront, trying to make the life of financial advisors really easy. We build seamless digital ecosystems and really reduce the amount of time they need to spend to make their money. That's basically it. So we're making it super simple, and our platform's doing that.
Yeah, I mean, I think the obvious question here is, what are risk managed solutions and how should our audience be thinking about that? And by the way, for folks listening in or watching, if you have questions about any of the terms that we're using or that are being referenced, please put them in the comments. We'll try to address any question that you have. But yeah, so Jillian, what are risk managed solutions?
Yeah, I'll tell you, if I can't help articulate what a risk managed solution is, I'm not doing my job, right? So my whole career has been built on hopefully, bringing education and awareness to this type of product class. Here's what I will say about a risk managed solution. I think of it like this. It's a type of investment product, so much like investing in, a stock or a bond, let's say, or a mutual fund or ETF. It's a type of investment product that typically has a defined maturity. So if you're investing, you'll know upfront that you're committing your capital for, let's say, 2 years or 5 years. Sometimes the products can be even longer. But they offer the potential to minimize portfolio risk, is how I think about it. So these types of products, when added into your traditional portfolio of equities and bonds, let's say, can actually dampen portfolio volatility. And it's because the products themselves, these risk managed solutions, have these almost asymmetric payoffs to them, where if you're an investor that wants to minimize your downside exposure to the market while still participating in the market gains, you can almost structure a product that meets that investment objective. You can actually buy a risk managed solution that offers you full downside protection. So if the market, sells off another 10, 15%, your principal is fully protected, but you still get to participate in some of the upside. And maybe folks are asking, what are, that sounds too good to be true type thing. Of course, there are risks associated with these products that we can certainly get into, but that's how I think about a risk managed solution. Asymmetric payoff, investment vehicle, typically a fixed maturity, offers me some type of opportunity to minimize portfolio risk.
That's super helpful. I think, the obvious follow-up question in my mind is, okay, well, if I'm an investor and I don't have a financial advisor, can I still trade a structured product? And, how should I be thinking about the types of structured products that would fit into my portfolio? So if I'm investing in, I'm picking stocks and I'm investing in some indices or some mutual funds, that's a typical kind of HerCapital community member. They're using an app, or they have a Fidelity account and they're buying stocks and they're buying ETFs and some indices, right? Where do structured products fit in, and how do you access them?
Yeah, it's a great question. So the way that I think about it is there's kind of two questions that you asked there. One is how to access them, and two is where do they really fit, or how do I think about the product? In terms of access, if you have a Fidelity brokerage account, let's say, you may be able to log in and go to the structured investment section, and there's probably a handful of products that you'd be able to pick and choose from. I would say the product today is, pretty heavily concentrated with the financial advisor community, which is actually the reason why we built SIMON to begin with. We were tapping the financial advisor community and giving them access to education so that in turn they could go teach their clients about these products. So that's kind of the funnel by which the product is typically bought and sold. When I think about like the actual use of the product in practice, in its basic form, it's kind of one of three different things that you're solving for. The first is you're looking to, park some cash that might be sitting on the sidelines. There are types of structured investments that offer full principal protection, so your entire investment is protected, or even actually carry FDIC insurance. I'm not sure if that's something that folks are too familiar with on the line, but it's a bank deposit that insures your money for up to $250,000. So in some sense, you can actually buy a risk managed solution or a structured investment that's almost a smart, quick way to deploy cash that's sitting on the sidelines, earning nothing right now in our savings accounts. The second way to think about it is, you're kind of replacing a portion of your equity portfolio. If you think about the standard 60-40 portfolio, equities, bonds, you can take a slice from your equity portfolio and actually deploy these risk managed solutions there. And because of their asymmetric payoffs, they actually can mitigate or dampen portfolio volatility, because sometimes they offer the downside protection with some upside potential. The third piece of it is, and not to beat a dead horse here, but what's kind of cool is these products, the level of customization for risk managed solutions is what makes them so attractive to financial advisors, because they really can develop products that cater to specific needs of their clients. And so for the last piece of that income sleeve, actually, there are certain types of risk managed solutions that actually allow you to potentially earn higher coupons than you would, say, a corporate bond. And in this particular environment where rates are pretty low, that's an interesting way to potentially amplify the income side of your portfolio. So there's a cash piece, there's a growth, equity component to it, and then there's an income piece as well.
No, that makes a lot of sense. And you're tempting me to now start looking into structured products for my own portfolio. So this is super interesting.
I'll tell you, it's funny, like it's the only thing I know. I have been in structured investments since 2011 or 2010 even. And if I personally don't buy into it, I couldn't be here, right? Yeah. So I've owned structured investments before in my own portfolio, and it's what validates what we're doing, in my opinion. So
yeah, and I think we through our kind of experience with HerCapital, there are so many women and men who are scared of investing because of the downside risk, right? So this seems like a really interesting way to mitigate some of that risk. And also, to your point, like, you can customize it. So if you have a specific goal in mind or a specific fear that's preventing you from investing, then maybe this is a route that you need to go down to and explore. No, that's been super helpful. Bindia, I will now ask you to explain annuities to us and why they're important. I know you mentioned them at the beginning of our conversation, but I'm sure most of our audience doesn't know what that means, and so would love to hear from you.
Yeah, absolutely. Happy to. So annuities are a kind of a risk managed solution, but they're also an insurance product. that are designed to generate income in retirement. And so before people are like, oh, retirement's so far away, I don't need to worry about it, I don't need to know about annuities, let me take a step back and really emphasize a few things about retirement planning, taking advantage of tax-efficient accounts and products out there. Because I wish I knew this earlier. I wish I knew this when I started working, that it is important to start investing in retirement accounts right from your first paycheck, honestly. And why do I say that? Is because you want to take advantage of the power of compounding over a long time horizon, right? Please maximize your 401ks. As soon as you have a child, open a 529 account, open an IRA account, max those out. You will forget about those things, but later in life, you'll be happy to see and you'll really benefit later in life. So, back to annuities, they, like Jillian mentioned, our platform is designed to educate folks around risk managed solutions. So as you get closer to retirement, I don't know about you guys, but I want to travel the world when I'm retired, right? And for that, I need a steady stream of income, even if I'm not working. And annuities will hopefully let me do that, where it is, again, gives you downside protection, but lets you participate in the market in a safe fashion. So you can participate in index gains. There are different types of annuities, but it gives you the downside protection like structured investments do. But these are now products that you will realize or get benefits in retirement. You're able to buy products with income riders that will generate income for you, a certain amount of income every year. So that lets you plan your retirement in an organized fashion. So I want folks to at least know that these exist. And as you look at your portfolio later in life, you always hear stocks and bonds. But with interest rates so low, annuities are a great alternative for the income portion of your portfolio later in life. So hopefully that gives you a little bit of insight. If you have any more questions, feel free to reach out to Jillian and I, and we'd be happy to add more color.
Yeah, Bindya, I have a question. So say I wanted to put some money into annuities, right? And my understanding is the best way to think about the difference between annuities and structured products is annuities you're planning for retirement. So the time horizon is different from, structured products. Obviously, as Jillian mentioned, you can be much more flexible in terms of the time horizon. So if I wanted to invest in annuities, again, that goes through my financial advisor. Is that what it is? And for our audience, like if they want to invest in annuities, who do they talk to or what do they do?
No, it's a great question. And so similar to how Jillian answered, you are able to buy annuities directly as well, specifically fixed annuities, immediates. Those are available. There are online platforms for those. But as you get into the more complicated ones, like structured annuities, typically you'll have a financial advisor to explain there are many different options within an annuity. And to explain the risks and exactly how much income you need, how much you need to allocate within a product. So we see financial advisors play a big role in that market. It is a huge market. It's 250 billion sales every year in the US. And we've only seen it go up, especially the structured annuities. It's trending upwards. Especially this year, we saw a huge jump in the pandemic because people are realizing that they need to plan better for retirement. And as markets turn down, they need the protection. So, yeah, absolutely.
Yeah. I mean, I was looking at the SIMON website, and I feel like SIMON has some really fun videos that explain what some of these things are. So for the audience that's interested or at least intrigued based on what Bindya and Jillian just told us, I would encourage you to go check out SIMON's website. They have these really fun animated videos that walk you through some of these structures and how they work and what they are. So I personally really enjoyed those, so I will recommend those. One question I had, I mean, Bindya, you touched on this a little bit, is kind of the trend we've been seeing. And so you mentioned this year, obviously, I think in general, every market has seen more of an interest from the retail buyer, right? So there's obviously more retail activity in the equity market. You mentioned you're seeing something similar for annuities. Are there any other trends that you want to mention to our audience today?
Jillian, you want to take that?
I'm happy to. And before I dive into that, I'd be remiss if I didn't make one comment that we are not in the business of giving investment advice. Hopefully this is designed to be purely educational in nature. So
good point.
Definitely wanted to make that comment. It's interesting. So I agree with you. I mean, I feel like we're just, even like colloquially, we're seeing people start to deploy money more into the market more, and that's taking different forms, because we've certainly seen that and felt it in the structured investments and risk managed solutions world as well. I think it's a couple of things, and I'm probably a byproduct of this as well. With being at home during the pandemic and watching the bull market from March, I got more personally interested in investing my money. And I had, to be honest with you, when you cut out an hour and a half of commuting both ways, you also have more time to learn a bit more about the market. So I'd be surprised if that wasn't one of the, decent sized contributors of why people are actually taking a closer look. I also feel like, and I don't know, I could be totally out there in saying this, I feel like as we start to learn more about like cryptocurrency and people are starting to get their feet wet in other types of investment products, that's also given like a natural lift to traditional investment products. So, I feel like that speaks to some of the trend that we're seeing of people working more closely with financial advisors. I know I personally did that over the last year a lot more closely, which is why this entire HerCapital event really resonates with me. That's kind of my 2 cents on why I feel like this has been a shift, recently. And in terms of continued trends, I think while rates are somewhat, are low and continue to potentially remain, quite low, I think people will start to chase yields and look for alternative products to potentially find that, that source of amplified income. So whether that be, looking at a risk managed solution like a structured investment or an annuity, I feel like that's going to be a trend that we continue to see as well.
Yeah, absolutely. That makes a lot of sense. And I think that's why we were so excited to have you both here, as this is, I think, an area of investment in the market that's not spoken about as much. And I think it's important for folks to be aware that, there's actually these interesting solutions that are available that are super customizable that can, potentially improve your returns, increase your income, and also honestly, like reduce your risk, which is extremely important and arguably just as important as maximizing those returns. So, again, we're super excited to have you guys here and to share this with our audience. One question that I had, and by the way, we're open to questions from the audience now too. So if anyone has questions about anything that we've discussed, career related or investment related, please put it in the comments. One question I had is around financial advisors. And this is something that, we've discussed on the HerCapital platform before, but this idea of, how much money do you need to have to then hire a financial advisor, or do you need to be a certain age before you can consider hiring a financial advisor? And Julian and Bindia, I'd love to hear from both of you kind of your take on hiring financial advisors or working with a financial advisor. And again, like not advice at all, but just maybe your personal experience or your thoughts on the subject.
Yeah, I can start with that one. I think as with many like long-lasting decisions that are going to have like a long-term impact over my life, I tend to seek advice or defer my opinion to the subject matter expert. And in this particular circumstance, the financial advisor is the subject matter expert when it comes to managing my money. And I was making the parallel earlier that we hired a wedding planner to help plan our wedding for that exact reason, defer to the subject matter expert. So, the advice that I wish that I had been given earlier, and that I will continue to peddle to anybody who will listen, is to start thinking about and engaging in those conversations earlier, even if you ultimately arrive at the conclusion that it's not the right time for you. I think that there are certain myths about working with a financial advisor, including, it's too expensive, I don't have enough money, I don't know where to look. And it's exactly like a HerCapital that provides the resources to tackle these types of questions. So for me, the decision to work with a financial advisor was very much outsourcing to the expert. And of course, with most things, there's a cost component to that, and weigh the cost versus benefit. But I can think of no better investment than to invest in my future. And that's kind of how I thought about it with regard to a financial advisor.
Yeah, I completely, again, agree with that. It's about how much time you have also in your day to, I'm all about delegating and outsourcing and making it all happen. So I can barely do my job and take care of my son. So if someone has the time and energy to think about my future, I don't mind paying that little premium and reaping a lot more benefit from that. So I think it's important, and I think you don't need to have a lot of money to start to think about portfolio planning, to start to think about retirement. And nowadays, there are so many apps as well that help you. There's technology that's helping young people a lot as well. But definitely engage and have that discussion. And simple tips like these tax beneficial accounts and things like that you're not aware of, your advisor will help you with.
Yeah, absolutely. And I think, in my experience, I feel like at least the first couple of meetings, a lot of advisors will do as a consultation that can be complimentary, or, you'll have a minimum amount to pay. And so, maybe if you're starting out and you're unsure, and if you don't have the means or the willingness to hire somebody full time, you can still engage with them maybe for a couple of meetings and get a consultation or get some advice to get started. I think, that's definitely something that I've personally tried, and I found it to be super helpful.
So we actually got a question from the audience, Jillian or Bindia, whoever feels more comfortable answering it. But someone asked, how do you invest in a structured product without having a financial advisor, if that's possible?
I will take that one. That is a very good question. So structured investments are securities. So you need to transact in your brokerage account. So if you go to a fidelity.com, right, and you have a brokerage account with Fidelity, there's actually a dedicated structured investments page, I believe, where there might be a handful of offerings for you to read about, to learn about before making the investment. But like I mentioned before, right now, the product is such that you would typically work with a financial advisor to kind of understand what the risks are, what the potential upside is, and the customization elements to finding the right fit for you.
So going off of that, as a young graduate, but also learning how to invest in my personal time, this is something where there's not a lot of information online, given that you would say a financial expert would be able to provide more insight in how they work and how to make those decisions, from what you're saying, Jillian?
Yeah, well, it's actually what Simon's mission is. Our mission is so it's funny, our mission is let's educate financial advisors. Let's get them very comfortable with the product, and then in turn they can relay that information to their client. And over the last year at Simon, actually, we've done a lot in the way of making resources available to folks like yourself, so to end investors as well, or potential end investors, which is why, Rabia, I smiled ear to ear when you mentioned the Simon videos that are available for public consumption. That's an example of what we're trying to do to really educate folks. And we've got a ways to go, Lisa, right? So to your point about, not finding access to information about these products or how can I learn more? We're actively trying to tackle that problem right now by providing resources.
That's awesome.
We got another question from the crowd. What's one thing you wish you knew when starting on your career/financial journey?
I can take that. So going back to, or you can start with that, Jillian. I'm sure you'll have a lot of good insight. In terms of investing, going back to what I said earlier, I wish I knew and I had started investing earlier in my career. So the longer you have to invest, the more benefit you'll reap. So I probably started 3 or 4 years into my career. I should have started immediately and started out maxing out everything available to me, but then also taking risk, right? It's okay. I was scared initially to take risk. I am a risk-averse person, but getting my feet wet earlier on would have definitely been something that if I had to redo it, I would have done that. And in terms of my career, I think just having the confidence, when you're young, you don't know, you don't always ask for what you want. Women are generally afraid to negotiate, and things are different now, but starting out, I was this really shy, docile person come from another country. And I wasn't always very confident in asking for what I wanted to do. I worked really hard, but having that confidence in my work and the ability to ask for what I wanted, whether it be role, whether it be compensation, is something that I would change if I could. Jillian, do you have any?
I have nothing to add on that. I echo that sentiment and then some. So well said.
Yeah, no, I mean, I couldn't agree more. I feel like most of us, when we start working, one, I couldn't agree more with you, Vindhya. We don't invest early enough. That's part of why we started HerCapital, right? Women are investing on average 40% less than men. We already get paid less, and so when you combine the gender pay gap with the investing gap, it's not a good situation for women to be in. So absolutely echo that. And one of the things we like to say at HerCapital is time in the market is more important than timing the market. And, again, could not echo your sentiment more, but really it's extremely important to be in the market and to be invested as soon as possible. And then hopefully you'll be able to reap the benefit of whenever the market is rising, as opposed to what a lot of us do is when we're risk averse, we don't want to invest because we're afraid of losing our money or losing wealth. And what actually ends up happening is your money is depreciating, it's sitting in cash, you're not making anything on it. So yes, please invest. Please start today if you don't invest. And absolutely, I agree with Vindhya and Jillian. You have to start asking for what you need in really every sphere of life, but particularly when you start working, it's extremely important.
I wouldn't be afraid to ask investing questions of your colleagues. The first investment that I ever made was at the understanding or suggestion of two of my colleagues who were senior to me at the time. And I had been so shy to just ask the questions about personal investing to them because I was trying not to blend work and personal. But it's at some point I started leaning on my colleagues and friends as more than just colleagues and tried to seek their suggestion and their advice. And that's honestly how I dipped my toe into investing. If I had not done that early on, I probably wouldn't have started investing until I later engaged a financial advisor. So lean on your network to ask those questions too, and ask them early, or ask the open-ended question, what question should I be asking, right? Kick it to them to tell you, some things that they've thought about or considered over the course of their wealth creation.
Yeah. And I'll shamelessly plug HerCapital here. We have a private group on LinkedIn. So if you are, if you don't feel comfortable asking your colleagues, or if you feel like you don't have friends that you feel comfortable asking, you can join that group and ask your questions. And the whole point of it is really to provide women with that safe space and that community that men often have. And unfortunately, women feel like they don't have, or they're too afraid to ask. And so, please join that community if you have questions, and you'll have friends there that you can discuss investing with and really bounce ideas off of. And we'd love to have more people join.
Jillian, I know you mentioned this earlier about leaning on your network and your mentors, and we got an additional question, so I thought you would be able to elaborate on it. But do you have any advice on finding female mentors in a male-dominated space like finance?
Good question. So I can point to a couple of things that I've done over the course of my career. It was funny. I actually started by leaning on my alumni database right out of school. And maybe that was because that was the thing to do in 2011 before LinkedIn, became more popular. But I actually went to the alumni database, and instead of introducing myself over email and trying to establish some type of pen pal-esque relationship, started to meet people in person. I would say that translated also to joining the women's network at Goldman and trying to meet people that way as well. But I will tell you the most successful I've ever been in trying to find mentors and mentees is create the connection in a professional context. So going to, let's say I was a salesperson at Goldman for 8 years, forming a relationship with with a female trader who worked closely with our team, or the other women that worked on our team as well. So really tapping the what I would call like the nuclear network was a way to start growing my like mentor and mentee community. And then from there, they introduce you to people, and that's how the network grows. So I tried to do it a bit more organically through like the direct lines of people I worked with.
Yeah, I agree with that. Women's network at your companies. I also would add to that and say past managers can make great mentors. People who've seen your work, have invested time in your work, can make great mentors, male or female. And sometimes just go and ask. If you admire someone, I think just send them a note. If someone asks me to be their mentor, I'll be so humbled. So don't be intimidated. If you admire someone, you have a role model, ask them, whether it's like 30 minutes a month or even less than that. They'll definitely make time for you.
Yeah, I love that. I think that's very good advice. And I honestly think I've always been pleasantly surprised by reaching out to women that I maybe didn't even work with directly. And most people are extremely open and want to help. So I think it's always good to reach out if you're impressed by someone or you admire someone. I think that's always a great idea. One question that we had gotten on one of our platforms was, talking a little bit about fintech and careers. So if you guys have any advice to share on, how should our audience think about exploring careers within fintech, and kind of any suggestions on where to look for potential roles?
Yeah, it's a great question. I'm trying to think about how I would approach it. I think narrowing. So fintech is a very broad like definition in my mind, right? There are direct to consumer platforms. There are platforms for financial professionals. I mean, there's a whole spectrum of fintech. And so I'm going to borrow from how I've tried to connect with people professionally. But I would try to use LinkedIn as a resource there. And I can't believe I'm saying that and plugging LinkedIn in this capacity. But it's a very quick and clean way to identify women who are, in senior roles at these emerging companies. Not only do you learn about them, but you also get a quick nod into where they work and a little bit about the company. So I've found a lot of success, leaning on LinkedIn actually to create this like well-rounded picture of how to navigate the world of fintech. And I would encourage people who are looking to break into fintech to kind of start there. The second piece of that too would be just lean on your existing network there as well and see if you can. A warm introduction is much better than a cold introduction. So getting that, is always important. I don't know, Vinya, I kind of want to keep
LinkedIn, but I would emphasize the last point, Jillian, that you made, the power of your own network. You never know who knows who. Yeah. So, reach out to your mentors. That's why you should have mentors. So anytime you're ready to make a change, reach out to them, run things by them. Warm introductions, like Jillian said, are the best. And there are many other reps, like Built-in is one. Simon is, by the way, hiring. So if anyone interested, reach out to us. Look at your network. You'll have friends working in fintech companies. There are recruiters out there who recruit for fintechs. Reach out to them on LinkedIn. So there's several ways. It's a very exciting space. Hopefully we've inspired some of you to get into this world. Good luck to you all.
Awesome. Well, we have one question about books that you'd recommend to someone who wants to improve his or her financial literacy. So if you have any favorite books that you want to mention, I think that would be awesome.
Value of Investing is a book that I really enjoyed and like. But outside of books, like reading the Wall Street Journal, watching shows and CNBC, things like that helped me personally to keep up to speed with the market. I don't know, Jillian, if you have any others.
I'm a Bloomberg.com girl, and CNBC as well. But I find that the content on Bloomberg is
Bloomberg.
Yeah.
Absolutely. And I think now, there are a number of newsletters too that will condense kind of interesting information for you, and it's straight in your inbox. So, I'd recommend like a lot of people like Morning Brew, for example. You get kind of a snapshot of what's going on, or The Skim is another one. So if you want to keep up to date with kind of what's happening, those are also great resources to check out.
Well, I think that wraps up our event. So thank you, Jillian and Bindia and Simon Markets for taking out the time to talk to us today. Thank you to our audience. And if you're new, you can follow us on our social media platform, which is in our event description below. And if you want to learn more about Simon and their educational resources, their information is also linked down below. And we will be sending out a follow-up email just to get your feedback so we can plan future events for you guys. So thank you, everyone.
Awesome. Thank you. Thanks.
Thank you, guys.
Yeah.
Bye.
Bye.